Welcome to the last panel of the day, but we've got an awesome set of speakers, some of whom I've known forever, and some of whom we just met. My name is Ronit Ghose. I run a think tank for Citi called Future of Finance, which does what it says on the tin. We analyze, write about, talk about where the world of money is going to. Until 2020, for about 12 years, I ran global financial research, moved to this part of the world in 2016, and I'd like the fellow panelists to introduce themselves. So over to you, Brandon.
All right, Brandon Robinson, Deputy Head of Private Markets, JPMorgan. If you were in the room about an hour ago, I was sitting right there. So happy to be with you all again.
Thank you, Ronit. Alex Green, co-founder and Chief Commercial Officer of Globacap. And Globacap's a private capital markets ecosystem where we provide operational regulatory workflows, enabling our clients to manage the entire life cycle of equity, debt, and alternative investment vehicles. We're also a regulated entity in the UK. We carry arranging authorizations. We're also a custodian. In the United States, we have an ATS license as well as a broker-dealer. Use those regulatory authorizations and combine with our tech and provide a transactional marketplace for our clients.
I'm Stergios Voskopoulos, founder and CEO of AltNovel. AltNovel is an investment firm based in Abu Dhabi, UAE, regulated by ADGM. And I founded AltNovel because of my experience and conviction that there is an opportunity to provide access to more accredited investors, high net worth individuals, family offices, and wealth managers into the evolving universe of private markets. And given the innovation and technology advancements, we want to take a lead on that.
Great, thank you, gentlemen. And we're going to start with you, Brandon. So just set the scene before we get into talking about technology and how this industry is becoming more sophisticated and using technology as a driver to attract and access new clients. Give us the macro lay of the land. Where are we in the growth of private assets? It's a truth, university acknowledged in financial services, it's a growth industry. You don't need to convince, I think, anyone in this room, right? We wouldn't be here if we didn't agree.
It is the alternative investment management summit.
Exactly. So we wouldn't be here. It's like, I guess it's like going to Catholic Church and not believing in the Pope and Jesus and the Holy Spirit. You know, we believe in this stuff. Okay, so where are we in the growth, you know, in terms of if one is infancy, it's just getting going. I don't know what that is, the 1960s, the 1980s, we're just getting going. And 10 is maturity. Private markets are as mature as public markets. 1 is infancy, 10 is maturity. Comparing private to public markets, where are we in the 1 to 10? And I'm going to come to you guys and ask you the same question in a second.
I mean, look, I don't know, 5. I mean, at the end of the day, and I don't want to rehash some of the statistics that Cameron was sharing earlier. Companies are staying private for longer. I mean, we are in a unique environment where many countries have regulatory regimes and tax regimes that allow for more entrepreneurial spirit, more capital to flow in from multiple different sources. And so as these companies start, their desire to stay private for longer has increased. I mean, a number of years ago, call it a decade ago, companies would go public, 3 to 4 years in. Now that's more like 12 to 15 if they go public at all. Yeah. Right? And so there's a lot of capital that can be put to work and a lot of unique opportunities. And as a result of those opportunities, more clients want to be allocating to that space. And so I'm going to dissect that a little bit more. Cameron talked a little bit about, private wealth, right? It's a relatively new source of capital into the private markets, which on this maturation journey of the industry is still in its infancy. To some degree, as regulators in Europe, in the US, and other places have started to open up, more favorable liquidity terms that we as alts managers have to kind of fit into. This is a new access point for individuals. As that capital comes in, it's becoming more and more apparent that we need to be able to handle the volume of individuals versus a large pension plan or a large sovereign coming into the space, which is where technology has really come to the forefront. That we have to ultimately leverage. because you have strong returns, you have diversification, you have all these benefits of being in private markets. But as a manager, sometimes we need help handling the volume of being able to give this great access to individuals. So overall maturation, probably a 5, I don't know.
Sure.
Private wealth in its infancy.
And it's particularly in areas like private wealth that technology plays a role in access. Stergios, from a regional perspective, you've been in the region a while, working here, based in Abu Dhabi, you were telling me off stage. Same question as I asked Brandon, but from a UAE, GCC perspective, where are we? A 3, a 2, a 7?
We have advanced. I remember I came in 2005 to work with InvestCorp. And back then, there were similar conferences, actually 1 or 2. And all that we were talking about was buyouts. It was all about private equity. And the market in 2005, from 2005 to 2010, did well in terms of establishment of PE firms. But as we heard earlier today also, right, the governance was not there. There were some issues that made investors to lose their confidence. At the same time, we've seen other asset classes emerging, like venture capital. In the past 8 years, there are many VC funds and private credit. Where we're lacking, I think, is on the secondary market. When I say secondary, I'm talking about a fund selling to another fund. There is a gap there. Comparing to global market, I think we're still below. However, there is a big potential, and we see that now going through this experience, we learned our lesson, and with more participants in the LP market, not only the sovereigns, not only the very large family offices, but educated, accredited investors, I think this is going to help also emerging talent to move here. We see that happening over the past 5 years. Lots of good talent is moving to the region from Europe or from the US, and they're setting up shop here. So I'm very optimistic. But again, compared to the benchmark, we're a bit below. But
sure. So we're a bit below in this region compared to the global benchmark overall. But if I drill into private wealth, family offices, high net worth individuals, could you talk a little bit about that side of the regional market and their interest, whether it's using technology or not using technology, to access the alternative asset providers, whether it's people like Brandon or others? Like, what are they thinking right now? Are they on the way up, or they're going, no, let's slow it down a bit?
When it comes to alternative, when it comes to private markets? No, I think there is room, right, to grow a lot, because the allocation today, especially from the smaller investors into private markets, is very low. It's below maybe 5%.
Right.
If you see the reserves in the region, I heard that today also, right? It's 5 trillion. So most of this money is sitting in a bank account, or it's going into real estate.
Right.
Or it goes through private banks to the channels of strategists and asset managers outside the region too. I think there is room there. That's our role too. We want to play education, asset allocation, and increase your exposure into private markets in a more diversified way. And access does matter. And that's, I think, the role that we have to play. So again, big opportunity there to grow.
Still a big opportunity. Alex, I think it was 10 years ago, 15 years ago. We don't want to age ourselves here, but we used to be in public markets and talk about public markets to each other on the trading floor in London. You moved out of public markets, so did I, kind of, but you went way before me into private markets. What drove that shift? Like, what did you see 7, 8 years ago, and why did you say, you're a co-founder of a technology company? Why? What was like that kind of original problem statement you saw that tech could solve in public markets, in private markets?
Sure. Well, thanks, Ronit. After spending, I think it was 18 years in public markets, or working in different facets with you at Citi, and then working in JPMorgan, distributing everything from IPOs and managing secondaries. What drove the shift over to private space was that we saw what was happening in the digital offering world in 2017 in the ICO space. And while we were not fans of this ICO move and the digitalization of the process, we were fans of that process. what it was, the ease of onboarding investors in a digital environment, the ease of digitizing Brandon's profile, digitizing the investment profile, managing that entire distribution, streamlining the subscription, and the ongoing lifecycle management of the asset. Well, then that was very exciting. So then we looked at what if we took that technology and actually applied it to traditional markets in the private space? What would that mean? Well, then you'd be able to unlock massive distribution potential, connectivity potential, and streamline the market for the growth that's coming and the allocation. So what Brandon and both Stergios have mentioned, yeah, the infancy is definitely in the first half of that 1 to 10 range. I think it's actually a total paradigm. It's a shift. We're in a different type of private market environment where you're seeing new asset classes, new emerging managers, new emerging strategies. The panel before, these guys are talking about specific India access funds. You didn't have that 15, 16 years ago. You didn't even have that 10 years ago. But as you have more opportunities, well, then you need more investors and you need able to distribute that. And everybody in the room, we all want better returns, right? I don't want to just leave my money sitting at 3.5%. I want 20, 30%, but I don't always have the ability to coin up or the ability for Brandon or him to manage multiple investors. So the infrastructure is certainly lacking. And the infrastructure needs to evolve to capture the inflows that are going to be coming to private markets.
And back in 2017, 18, 2019, what does the infrastructure look like back then? And how far have we come, Alex, in that 5 to 7 year period?
Well, I guess in the space that I play in,
I mean, have we gone from fax machines to the internet yet?
Absolutely. Well, you've gone from paper to fully digital process.
Okay.
For some of our clients, we've completely digitized their entire investment network and platform, from automating their distribution, their subscription, their KYC, AML, regulatory subscription process of their investors, building the books, settling the transaction, managing the register of the assets, and even providing for secondary transfers within their own ecosystem. So fully digital process. Now that depends on who you are, right? If you talk to Brandon, they have tech. They have digital strategies that they deploy across some of JPMorgan, certainly. But not everybody does.
And what does specifically Globacap do?
Excuse me?
What does your firm do?
Our firm, we provide operational and regulatory workflow streams that any player in private markets. So we have private companies, but for this space, we have private equity and VC groups that manage subscriptions into LP vehicles. We also have strategies that they can use to become more commercially active or more creative in terms of accessing more investors. Perfect example, we have a client that we just onboarded and closed last week. They had a $5 million minimum into their LP. They wanted to access more investors, so they used our digital nominee vehicle to lower that subscription amount down to $500,000. But now that required them, the minimum was $500,000 to onboard many investors, which would have been cost prohibitive going through their traditional structures. And they don't want to have to manage all those people. We digitize the entire process for them, and they've done it, and they've closed the vehicle in 1 week.
Great. Stergios, what do you think when it comes to using technology more deeply in the whole process? And do we need companies like Alex's?
100%. I mean, from an automation perspective too, right? So the other day, I remember we had, even from a GP perspective, because we are an LP, in a way, we are just putting together investment solutions for more investors, accredited investors, and we are due diligencing GPs, and there is a new GP in the secondaries market now that we were discussing the other day, and they told me that using tech and be designed, it's a team that left another legacy firm, right? And they were saying 80% of the due diligence is being automated. Why? Because the PDFs are coming in, and all the numbers, right, are going directly into an Excel or another financial modeling tool, and that saves them right away time. Same thing for us, right? It saves us time from an automation perspective, how to onboard our investors, how to engage them, how to interact with them, how to have the lead generation, how to do some decision-making in-house. And that's money that we're spending, right? In order to automate as much as we can. So that saves us time. When you save time from a more manual process, you put more time into investing. What we are paid for is to invest, right?
Sure.
Even when I was running a family office, we automated a lot. We became better investors. Why? Because we have 24 hours a day, right? So if I waste all my time, you know, in very cumbersome tasks.
You want to source and select the best funds
so, yeah,
for your clients.
Yeah. We need infrastructure players like Globacap where we, from our end, we
Yeah.
upgrade that to a different level of optimizing decision-making and due diligence, portfolio management, engagement with our investors.
Totally. And Brandon, we've heard from two relatively smaller companies, well, small compared to JPMorgan. I think, at least by market value, the world's biggest bank. I don't know about balance sheet.
Yeah.
There's obviously some Chinese bank out there, but by equity value, it's the world's biggest bank, and it's a completely different scale. I mean, your tech budget is what, 14, 15 billion a year? It's like huge. How do you use technology, or how can you see technology being used around you in the ecosystem, in the industry, to better the industry? And is that having a real impact already, or is that still like a nice panel to have at the end of the day before we go for drinks?
I mean, let's try and set the stage, because this actually is an extremely important topic in private markets broadly, like how technology is evolving to provide more access and frankly help managers of money spend more time managing money than onboarding, for example. And you're right, JPMorgan as a company invests a lot in technology. It's an extremely important part of our budget. However, private markets is unique from a bank. It's unique from an investment bank. It's unique from being in the public market space. And so we too have, on our private markets platform, have to think about what's going on in the private markets space specifically, regardless of what JPMorgan is doing in the banking space or what have you. So I'm going to see if I can't drill down a little bit into that for you all. We want to create an end-to-end digital experience. We don't necessarily have to build it all ourselves. Do we have the budget to do it? Sure, but that doesn't necessarily mean that's what we should be investing our capital in. And we want an experience where a client can essentially have a portal, click through and be able to onboard, do their subdocs electronically, and then do KYC electronically, and then ultimately start to interact with their investment through reporting and things like that electronically. We haven't even built wholesale something like that on our platform. So we use external partners who invest in that technology and capability in order to get that done, because that's a more efficient use of our own capital.
Of course, yeah.
Right?
You've got to prioritize.
Our market cap is what it is in part because we try to efficiently allocate capital into areas, and our competitive advantage is going to be in managing money as opposed to KYC processes, for example.
That's probably a good thing, right?
Yeah, exactly. So this is extremely important and relevant in the industry of private markets. If we don't get this right, what are we missing out on? Stergios talked about the allocations into private market investments for two-legged individuals. Let's say it's 5% of a portfolio if you happen to be an AIQP, and it's 0 if you're not, right? Regulators, as I mentioned earlier, are allowing more of these kind of semi-liquid vehicles to be created. So you can go AI, you can go QC, you can do these different terms the industry comes up with. But we need a way as managers to absorb that. If we're going to go put your allocation up from 5 to 10% of your portfolio, so you get diversification, income, et cetera, we as managers need to focus our time on continuing to deliver the alpha and all the reasons why you're going to put capital there. We'd want someone else to kind of help us do all of those other parts of the client experience. And maybe we come on top of it with our typical, white glove service or something like that. But the chassis ultimately can be done with technologies and probably better served, by partnering with other firms to get that done. So from my perspective, we specialize in finding the right partners to build an ecosystem of digital experience as opposed to having to build it ourselves.
Got it. Sorry, you wanted to jump in, Alex?
No?
No?
Go ahead.
No, I just want to say it's about where you focus on, right?
Okay.
So what you paid for. If you're trying to do everything, then you're not going to do well. So you better choose what you're good at and do it, and just find partners. So we are an open partnership firm. At the end of the day, we are offering a solution, right?
Yeah.
That is the optimal for the people who pay us.
Yeah. You want to be an investment advisor, you want to be an investor, and you want to be a technology-driven solution provider, right, Alex?
We're a tech company. If you ask me, I'd rather not have to be a regulated entity. I don't necessarily want to be a custodian and an arranger and invest in transactions and run an ATS and a broker-dealer licenses. Those are very expensive. Those are very painful to maintain and operate. We needed to do that 7 years ago because you would talk to people about the strategy we're running now, and they'd look at you like you were crazy. But that's where it's gone now. But we are exactly what Brandon mentioned, what Stergios mentioned. We are a tech partner. We're called Globacap Technology Limited, and we are that tech resource that allows you to innovate, to remain competitive. And that means something different for everybody in this room. But there's not one person in this room, hopefully, there's not one person in this room that doesn't want to grow their business, become innovative, expand, and become more commercially competitive. What's the risk of not doing it right? It's like evolve or die.
And you might, I don't know if it was a throwaway comment about 2017, Alex, and ICO summer, but there's a big kind of blockchain underlying reference there. Could we just double click on that, Alex? I mean...
My view on blockchain?
No. You're blue. Do we need to talk about blockchain? You could just say no, but you kind of mentioned 2017 and there's a blockchain connection there.
We went from being a completely digital blockchain platform to actually not using blockchain in any capacity in any way, shape, or form because we deal in traditional securities. So we would argue, we use what I say is IA, intelligent automation. We use AI components on the platform. We are not against blockchain, but blockchain is not necessary to do what we do here. It's not necessary to distribute. You have to comply with regulatory rules, operational requirements, and legal requirements. And those require you to be a custodian and arranger, to be able to accept risk and transfer liability, and a digital process. Now, blockchain certainly has a space to play, and that will be in creating new asset classes, new types of vehicles.
And tokenization of private assets.
Like version 2.0 or 3.0 where Stergios is playing it.
Yeah.
Absolutely, there's blockchain there, but to digitize a security for the ease of sale, well, I mean, you still have to
for better KYC or better onboarding, we don't need that. It probably makes it worse.
Well, it's not about better KYC or AML onboarding. I can't accept Brandon's KYC or AML onboarding if I'm settling the transaction necessarily.
Right.
So blockchain doesn't solve the regulatory and legal element of it.
So you started down the blockchain rabbit hole, but then you pivoted and you saw IA is a better solution to what you're trying to do, intelligent automation.
I'd say yes.
Yeah.
But we're not adverse to blockchain being used in, there BlackRock, JPMorgan's using blockchain in very specific circumstances, for internal purposes to make processes more efficient, to create different types of vehicles or assets.
Yeah.
Absolutely. That's very, very powerful.
Okay, we don't need to go down the B word. Brand, do you want to jump in here or?
Yeah, I tend to agree in that most of what the activity is in private markets, taking in a dollar, a pound, a dirham, or what have you, and putting it to work in a company does not require blockchain or any of those types of things. But you talked about tokenization, right? I mean, at the end of the day, you need a highway in order for the car to drive on, right? And blockchain needs to mature in the private market space in order for tokenization to grow out of its infancy. And I do actually think that part of the future of access, as long as the regulators kind of remove the AIQP requirement or professional investor requirement on a token, is the future of investing in private markets. We're working on it ourselves. You talked about our tech budget. A growing part of that budget is on our platform Onyx, which is our digital asset or tokenized platform. It's banking in the metaverse. You've heard Jamie talk about it. We want to be a material part of that platform over time, and so we are exploring tokenization. You'll probably hear something in the coming months on this, because we do think it's an important way for private wealth individuals to ultimately access and understand what they own, within the private markets space. So we need blockchain to be there so that we can put the token in there.
If I just may, we're, again, completely agree with what he's saying.
Yeah.
It's digitization first, and then you can apply blockchain.
Yeah, you can't go to digital assets with no digital to start with, which has been the problem in trade finance, custody, security settlement, the whole FMI space. We've been like 7-10 years running around, or people have been running around pitching to us in banks going, we can solve everything, and using blockchain, like, well, we're not digital yet in trade, so how are you going to put us on blockchain if we're not digital. We're out of time. We've got 12 seconds left, 11 seconds. Maybe one last word from everyone that we saw a great slide going to 2029 before. So 2029 private assets, what does it look like? Maybe we're all sitting here again on this panel. What are we talking about on this panel in 2029? One word, one sentence answers. Alice is going to kill me later. It's Stergios, you start.
I think it could be more, right? I mean, and if private wealth comes into the private markets, this will drive the growth of private markets to a higher level.
So bigger.
What is it?
Alex?
It's 2024. I worry about 2025. I worry about the end of this year. But 2029, it's a completely different landscape. You're talking totally different. Everything is completely digitized. Then you are seeing very strategic uses or wider uses of blockchain. But people aren't going to talk about blockchain anymore. It's like you don't talk about things being on the World Wide Web.
No, we don't talk about
it's just processes that you're feeling.
No one talks about infrastructure when you're doing stock trading. Or
right. And
you just say, I
want to be the
bought some Apple shares or whatever, or Nvidia now.
I think you're going to see many different types of strategies, a lot of innovative strategies. Firms, family offices will be more competitive, more dynamic market is what you see.
Got it. So bigger, more digital. Brandon, you get the last sentence.
I would say combining both of those two things into education as we go more and more into the private wealth space. Both distributors and the end client need to understand what they're investing in more and more and more, the illiquid nature of it, the way they access it, how is it generating its return. And so in this year, next year, 5 years from now, I think there's going to continue to need to be an explosion of education.
Okay.
And technology will ultimately help with that as well.
Absolutely. So responsible investing from Brandon. Thank you so much. We're like a couple of minutes over time, but it's been awesome.